you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions. Hello and welcome to Morningstar. I'm Emma Wall, and here with me today is Morningstar analyst Jose Garcia Zarate to talk about what's going on in Russia. Hello, Jose.
Hello.
So it's been a very volatile year for Russia. What exactly has been going on?
Yeah, as you correctly point out, it's been a rather volatile year for Russia. Initially, the concern was the financial sanctions against the Russian economy. But over the past 6 months, what's happened is that we've had a dramatic fall in oil prices. And the Russian economy is heavily dependent on oil exports. It's a non-diversified economy. It relies exclusively on oil and gas. Therefore, any drop in oil prices and energy, international energy, should be reflected in foreign exchange valuations, which obviously is, in this case, is why the ruble is going down so dramatically.
And the currency really has taken a beating this year, but in particular in the last couple of weeks. And they seem to have sort of said enough is enough, because the authorities have stepped in, haven't they? They
have, actually. There is this uncertainty about what oil prices are going to do. And therefore, the assumption is that they might actually drop even further. That actually is a negative for the Russian currency. The central bank has said, as you say, enough is enough. Let's try to prop up the value of the ruble in the foreign exchange markets. So what they initially did was to hike interest rates to from 10.5% to 17%, almost overnight. That really didn't seem to work. So now we are on stage number 2, which is basically using the central bank foreign exchange reserve currencies in order to intervene on the international markets in order to prop up the currency. And we don't know whether that's going to be effective or not in the short to medium term. 17%
interest rates, you can only dream of those in the developed world. Talking of the developed world, how much does what's going on in Russia affect the rest of us, affect the rest of the global economy?
Well, there's always a potential of contagion, which would be very damaging, particularly for the emerging market economies. At the moment, it seems to be fairly contained, although you would expect some spillover in terms of volatility to other regions. It's very much dependent on the evolution of oil prices in the short to medium term, and that's a big unknown at the moment. If oil prices manage to stabilize somehow, or if the Central Bank of Russia is successful in its efforts to stabilizing the currency, maybe we shouldn't worry too much. The problem is the volatility and the potential contagion. The one thing I would say is that emerging markets economies are much better equipped to deal with this crisis than they were 20 or 25 years ago. The key issue here is that they are much better governance, and they've been amassing a great deal of reserves that will allow them to put up a fight that they were not able to do 20 or 30 years ago.
Jose, thank you very much.
You're welcome.
This is Emma Wall for Morningstar. Thank you for watching.